Hello, traders. Last week, stocks closed the last trading week of the month. Investors summed up the March results. Overall, it was a rather pessimistic first quarter. March was rather challenging for stocks. Finally, April has come. Historically, it's the best month for Wall Street investors. Weekly changes in the equity market were quite insignificant. Speculators were digesting the results of the non-farm payrolls report and other macro stats. This week, market participants are looking forward to the release of the FOMC meeting minutes. Subscribe to the channel and stay up to date with the latest market news. Feel free to leave your feedback and let's get cracking! According to the non-farm payrolls report, the US economy added 431,000 new jobs. The reading slightly undershot the forecast. However, it did not undermine market sentiment. Traders still expect the Fed to hike the key rate by 50 basis points. Other components of the report, such as average hourly wage and the unemployment rate, exceeded expectations. And the US labor market looks very strong. The bullish momentum was limited by weak data on construction spending and the manufacturing PMI index. In general, macro stats published last week were favorable for the US dollar. It means that the likelihood of a sharper rate hike remains high. Stock traders' reaction was muted, and for them, strong jobs data signals a more hawkish stance on monetary policy. The Dow Jones showed the weakest dynamic. If other key stock indexes rose at least slightly, the Dow slid into negative territory. Its weekly drop totaled 0.12%. Now, the index is trading at the same levels as 7 sessions ago. It's also hovering in the same range. Its trajectory is unlikely to change considerably in the next sessions. Only the news on the war in Ukraine may change its trajectory and soar market sentiment. At the beginning of the Russia-Ukraine conflict, Wall Street experienced a steep drop. Later, stocks managed to erase the early losses, and they have also become less vulnerable to geopolitical news. Judging by the comments of Western leaders, they are likely to impose new sanctions against Russia, and at the same time, Moscow and Kiev are preparing for a new round of negotiations, which may help bulls regain momentum. However, keep in mind that geopolitical wars may drastically change the current forecast. Investors are waiting for the earnings season in the United States, which starts next week. They are curious to find out the earnings results of the companies as well as the profit outlook. Some companies may even adjust their revenue forecasts. On April 5, the stock market looks stable. The S&P500 index remains almost at the same levels as a week ago. It's so small that it makes no sense to talk about it. Analysts fear that the index may resume a downward movement. In the second half of the last week, the S&P 500 went down, and however, at the moment, economists remain bullish on the index. The day before, it broke above the key moving average, consolidating in the range of 4,487 and 4,455 points. The S&P 500 made an attempt to approach 4,668 points, but it only slightly touched this level. If the bulls push the index above this level, it's likely to move to 4,712 and then to a stronger resistance level of 4,745. And if so, it may try to hit an all-time high of 4,819 points. Yet the index is unlikely to rise above this level. According to the medium-term forecast, the stock market could be trapped in a downward channel. The first support level is located at 4,514 and the next one is at 4,488 points. After that, the price may fall to a low of 4,455. A breakout of this level will push the price to a lower range. This is the main forecast for the index. Summing up the results of the first quarter, we can say that the stock market has gone through a rather difficult period. The sell-off of stocks at the beginning of the year was disastrous. Many stocks included in the S&P 500 index showed the worst quarterly performance on record. The S&P lost $1.46 trillion. The tech stocks in the top 10 shed in combined $3 trillion in value, with the tech-heavy NASDAQ index down by 9.1%. Its weekly results were more positive. The NASDAQ showed the best performance among the stock indexes, gaining 0.65% last week. And on April 4, the tech sector spurred activity on Wall Street, and the NASDAQ climbed by almost 2%. Tech stocks advanced to meet Elon Musk's investment. He purchased a 9.2% stake in Twitter. Company's shares surged as much as 27%, boosting the growth of other IT stocks. As a result, Netflix shares rose by 4.8%, while Alphabet shares increased by 2.1%. Tesla's market cap jumped by 6.5% following the news that the company's car deliveries in the first quarter soared by 68% compared to the same period last year. The increase came despite supply chain disruptions and COVID-induced factory shutdowns in China, and the Tesla factory in Shanghai will remain closed for quarantine. But analysts believe that Elon Musk is determined to produce even more cars. A new plant has just opened in Berlin, and another one will open in Austin, Texas on April 7. Tesla's shares rose by 1.8% in the pre-market on Monday. Over the past 2 weeks, the shares of the world's largest electric car manufacturer have shown a dazzling recovery. They added more than 35%. Demand for Tesla vehicles could have grown amid a jump in gasoline prices. Electric cars look more attractive in times of soaring oil prices. Even US President Joe Biden is now calling for a quick transition to them. Don't miss our video reviews in order to keep your finger on the pulse. That's all for now, and see you soon.